Are the historic low interest rates ending? Interest rates have been increasing, and we have seen that impact on the housing market. So let's dive straight into the truth about what's really going on right now. If this is your first time here, welcome aboard. Our video channel here is packed with information about helping you avoid the pitfalls that are costly. So if you're ready, tap that red subscribe button and make it turn gray. The Mortgage Bankers Association just announced the 30-year fixed rate mortgage has increased to 3.25%. Now, what does that actually mean, right? So a decade ago, mortgage rates were around 5%. And last year at this time, mortgage rates were around 3.5%. So rates are still extremely low and historic low levels. But with an increase in rates, can this impact the current housing market? You know, how does recent rise in interest rates actually affect the monthly housing payments? Does it decrease the buyer's purchasing power? The 10-year Treasury note has been increasing recent weeks, week after week, and the worries are on stronger economy and growth is coming. But funny, good news in this case really isn't good news. Growth in the economy is fueled by vaccines, stimulus, printing more money, and ultimately inflation. Now, inflation is a big problem for you, unless you know how to control it, that is. Inflation means the cost of goods and services go up, and that's what we're seeing right now. A dollar in your wallet is worth less money than it was worth a month ago. It costs more dollars to purchase the same things that you were purchasing just 1 month ago. I did another video on that, on inflation, and it's what you need to know. You should check it out, and it's here on this channel. I'll put a link below. So the Fed has been buying mortgage bonds and keeping rates really low. The government will do anything to keep this economy going. You've seen this already. All of the printing of money, the stimulus programs, the forbearance programs, the unemployment benefits, and so much more. The Fed wants to keep the housing market moving because the people who are involved in real estate transactions circulate money. Think about all the materials that go into new homes. Think about all the jobs and the renovation and the construction. All the money that keeps circulating in this economy and all the jobs that they do provide. So the big question is, will rates continue to rise and will it have an impact on the housing market? Now, new mortgage applications have actually dropped by more than 10% with this rate increase. And many people who were refinancing mortgages weren't moving at all, but they already have lowered their payments. So the rush for mortgages and refinancing has slowed in that respect because they've already locked in at the lowest rates. Also, comparing the number of home purchases just 1 year ago, it's still 10% higher than it was last year. So what this means for people buying houses faster than ever, and the number of houses on the market still are less than it was last year, this is another problem. And many people are sitting on the sidelines and waiting for prices to go down. However, the prices are actually going up week after week, month after month, and year after year, prices continue to rise. Many hopeful home buyers are essentially locked out of the housing market, missing one of the biggest opportunities. So the basic rules are here of supply and demand. With less houses on the market available to purchase, many can't apply for those mortgages because they don't have the house. They have not been able to find the house. Now, we all know how many people are historically coming off the sidelines and purchasing normally in the spring. But with inventory so low, it's hard to find a house. And in these lower price ranges, it's extremely competitive. We see home prices continue to rise. Now, the average loan size of purchasing applications has increased to an all-time record of $418,000. But that's in line with the home seller prices that are fueled by these low inventory levels. And I can tell you here in Myrtle Beach, South Carolina, we're still seeing strong demand and people that are relocating to lower taxes, a lower cost of living, great weather, and of course, the beach lifestyle. Now, if you want more updates like this one, just consider subscribing to this channel. I post helpful videos here about real estate market, and I really do enjoy making these videos for you. YouTube is not my full-time job, and the reason that you can tell that YouTube is not my full-time job is because you've been looking at that reflection from my video equipment, right? But I hope you understand the reason that I'm doing these is for you. I really do appreciate you watching these videos, and I really want you to avoid the pitfalls that are costly. Make sure that you have all the info that you need when you're buying and selling a home. So wherever you are and whatever you're doing, I hope you're enjoying these videos. It's Jerry with Jerry Pinkas Real Estate Experts here in sunny Myrtle Beach, South Carolina. So I'll see you in the next video.